So Trump Media just finalized an ETF partnership with Crypto.com. So now we're gonna have a Trump
Everybody
ETF.
hurting, but you winning.
Everybody stressing about their money, but bro just going to the bank on us, you hear me? Trump Media and Technology Group, ticker symbol DJT, is expanding into the fintech with plans to launch a series of American First themed digital assets and industrial focused ETFs under its Truth.fi brand, allocating up to $250 million toward the initiative in partnership with Yorkville American Digital, pending regulatory approval. Bro is cashing. Listen to me. I'm gonna tell y'all this. We got 3 years and 10 more months of this. 3 years and 10 months. You ain't been off for 2 months. Well, today made 3. He got elected, what, January 20th?
So it's still under 100 though, right?
Still under 100.
Yeah.
So we got 3 years and 9 more months. Bro, mark my word on this, yo. Jose, we gonna probably be on, let me see, 50, that's 100, 50. We probably be around episode 300 when the next president come in office, somewhere around there. Bro gonna be worried about 50 billion when he get out of office.
And he might pull something to try to get a third in them.
Bro, he gonna bare minimum be worth at least 30 billion by the time he get out of office. He raking up, bro. You know what's crazy? I stopped saying what this dude can't do.
Yeah, no. As soon as you say, he like, word, what'd you say? Hold my beer. I got you.
You can't say what he can't do, bro. He gets mightier. You say he can't do something, bro. He find a way. He find a way. Let's go a little further, man. It's been a bumpy start, y'all. The S&P is on the 3rd worst start of the year, right? Based on the first 74 days, man. Worst 74 days, worst year-to-date 74 after 74 days at minus 12.3%. Now watch this. This was interesting. This is what's interesting. The 2 times previous, 1939 and 1932, those years actually ended higher. 1941, it ended lower. 2008, 1941, it ended lower. 2008, it ended lower. 1977, it ended lower. 2002, it ended lower. 2021, it ended lower. 1973, it ended lower. 1962, it ended lower. So 1, 2, 3, 4, 5, 6, 7. 7 out of the 20 times it ended lower. My question is, do we think the market ends positive this year? So listen, first 74 days, the market ends, the year ends, the market ends up 15%. Now listen, that's look at this, minus 17.9, minus 25.7. The market still ends 14 points, 15 points. Come on. Look at this, 2009, the market was down minus 7% and then rallies at 34%. That's insane. Here's something I want to point out. Every time in the 74, which is the first quarter of the market, every time the market in the first 74 days has ended lower, double digits, it has ended higher in double digits. You get what I'm saying? So in the 74-day rate, which we rating right here, anytime it has been double-digit negative. So in 42, it was double-digit, 10.4%. 2020, it was 11%. 1939, it was 17.9%. In 1932, it was 25.7%. Every time, double-digit, it ended higher. So in 1942, the first 74 days, it was down 10%. It ended up 25%. In 2020, it started in those first 74 days down 11% and ended up 30%. 1939, 17.9%, it ended up 15%. And in 1932, minus 25%, it ended 14.8%. Can we put that on the big screen so they can see it? Somebody said he can't keep his damn mouth shut. You got a point right there. Like, all these stats are good until you get a Donald Trump in office, right? Like, we ain't never seen a president like him, bro. So my question is, Jose, do we end the year up positive?
I mean, based off of the stats, yeah. And you know, I'm always trying to be optimistic in this joint, so yeah.
Let's actually
And right now, as far as the chat, with 400 votes in, we got 73% say we ended positive.
That's a fact. The data ain't never met an orange man, bro. That's a fact. We done had a Reagan, we done had a Clinton, we done had a Nixon, we ain't never had a Trump.
They asked that joint on the daggone 1-800. It's like, bro, we ain't seen this before.
Yeah, it's different. I think we come out 10%.
Yeah.
I think we etch out a 10%er.
Cause how much are we down now?
Minus 12, minus 13.
Yeah. We can come out.
Here's the thing what I say about it, and here's what I will say. I will say this. As rough as it has been, we're only down 10%. We down 9% as of today.
Yeah.
S&P down 9%. NASDAQ down 12%. As rough as it has been, we're only down 9 and 12%. That ain't something we can't come back from. It just feels horrible because you're in it in real time. No, this is the fastest it ever happened. So I was doing some research.
It feels concentrated.
So I was talking to Peter about that. And Peter said, bro, this is the fastest that it has ever happened. He's like, bro, you don't erase $11 trillion out that fast, like in under 100 days. He's like, bro, this is the I can't tell you what Peter said, but he said, this is one for the books here. He said, no one will forget this. I always want y'all to see this, man. 4 quick facts investors should know about the S&P 500. This is gonna be good for you. Market cap weighting. The S&P 500 is a market cap weighted index, meaning that companies with larger market capitalizations have a greater impact on its performance. So think about it from this perspective, right? The reason why Apple, Nvidia, Facebook, the reason why these companies move the S&P so much is because they have big market caps. So the S&P is a market cap weighted index, meaning the companies that have the bigger market caps would actually move the S&P 500. Now remember a while back I made y'all do some homework and I asked y'all which ones move different. The Dow is different and then so is the NASDAQ. Your homework is to go figure out what moves them differently. You know that the S&P is market cap weighted, meaning the bigger the market cap, the more it moves. Some companies can be on the S&P, the Dow, that's the thing. So definitely you need to go check that out. Next, diversification, right? Investing in S&P, it also offers instant diversification against all sectors. This diversification helps reduce risk. So one of the things I say is you don't need VOO and VTI. VTI is the world global, but literally 65% of VTI is in the S&P 500. So it's kind of, you know what I'm saying? I think if you're gonna do it, I know my guy Ian says it, but everybody have a different philosophy. I'm not against what he got going on. Again, historical performance, man. Historically, the S&P has delivered an average return of about 10% since 1957, since the inception. So I personally think that we can get 10% this year. This is why I use the VOO as my savings account. Because on average, I can get 10% from my money. You kind of reinvest the dividends. You know what I'm saying? Next, market representation. The S&P index includes 500 of the largest public traded companies in the United States. It represents approximately 80% of the total market cap of the U.S. stock market, meaning the S&P 500 represents 80% of the valuation of the stock market in the United States. It's the 500 biggest companies per market cap. So I put money in the VOO all the time, not even looking for the return because I just feel like that's the safest place for my money. So people be like, well, Trap is down 12% this year. I say, guess what? I got 20+% last year, 20+% per year before. I'll be all right. I'm only down, 9% this year so far, right? Still making money. Means I need to buy some more. Means I get to put my money gets to buy asset at a discounted value, and then over the next 5, 6, 7 years, that goes up in price. My savings account has made me more money than just putting it in Chase.